All right, welcome to The Explainer. Today we are diving into a really fascinating theory that claims there's a hidden, predictable pattern hiding in the chaos of financial markets. It's called the magic band, and it suggests there's a code that governs the rhythm of how markets move. So let's jump right in and see what this is all about.
You've all seen it, right? You look at a stock chart, and it just looks like a total mess. A bunch of peaks and valleys with no rhyme or reason. The common thinking is that it's all just random noise. But what if it's not? What if there's actually an underlying order to all that madness?
Okay, so to find that order, the theory says you first have to find an anchor. It starts by identifying what it calls the market's center of gravity, a kind of stable point right in the middle of all that volatility.
Now, this center of gravity, it's not just some fixed price, right? It's a dynamic, moving line that supposedly shows the true underlying trend. The way the source material puts it, it's like the unconscious consensus of prices. Basically a way to smooth out all the daily drama and see where the market is really heading.
And this idea leads to three, really key observations from the source. First, prices are always swinging back and forth around this center of gravity. Second, they don't just move away from it, they tend to exaggerate those moves, both to the upside and the downside. And finally, the direction of this center line itself is supposed to give you the market's real underlying trend.
So, we've got markets swinging around this central point. But, and this is where it gets kind of wild, what if the size of those swings wasn't random at all? What if there's a code that actually dictates how far they go?
Yeah, this is the absolute core of the whole idea. That distance that the price stretches away from its center, it's not just arbitrary. The theory claims it follows a hidden rule, a very specific mathematical principle that, believe it or not, shows up in the most unexpected places all around us.
So what's the rule? Well, it's supposedly governed by the golden number. You've probably heard of this thing, right? The golden ratio. It's this proportion you can find in everything from the shape of galaxies and seashells to ancient architecture and famous paintings. But what on earth is it doing in financial markets?
And there it is, 1.618. The source material literally calls this the market's magic number. It's the secret ingredient that supposedly sets the rhythm for the market's breathing.
Okay, so how does this number actually work here? The idea is that the outer limits of the market swings, its points of maximum stretch, they're calculated using proportions of this magic number, 1.618, measured out from that center line we just talked about.
All right, so we've got this center of gravity, and we've got this magic number that defines the extremes. How in the world do you put that together into something you can actually use? This is where the whole rubber band concept comes into play.
Well, it all boils down to creating these two key zones. You have the red zone up top. Think of it like the market taking a huge breath in, an overstretched area where selling might make sense. And then you have the blue zone down below. That's the full exhale, an area where it might be a good time to think about buying.
And look, the strategy itself is super simple. Basically, if the price pushes up into that red zone, it's a signal that the market might be overdoing it. And if it drops down into the blue zone, it suggests the market has overstretched to the downside.
So you might be asking, why would anyone actually trade this way? Well, according to the source, it all comes down to one really powerful number, 90%.
This is the big claim right here. The idea is that once the price stretches into one of those outer red or blue zones, the probability that it'll snap back toward the center, just like a rubber band, is around 90%. It's such a simple but powerful way to think about it, isn't it? The market as a rubber band?
So why? Why would this number, 1.618, have anything to do with markets? Well, the source makes this incredibly bold claim. The magic number isn't in the charts, it's in us. That it's somehow hardwired into our brains, influencing our collective behavior no matter who we are.
And that, it leaves us with this one last really big question to chew on. If there's anything to this at all, does it mean the real hidden code of the market isn't some complex algorithm, but just the predictable, almost universal patterns of human psychology?